Hello, welcome to the weekly technical analysis review for Monday, October the 15th. I'm Rafi Boyadjian, currency analyst at XM.com. The pairs we're going to be looking at for this week are the dollar yen, the pound dollar, and gold. Starting first with dollar yen, we can see that the near-term bias for the pair is very bearish at the moment. There's been a significant deterioration in the positive picture as indicated by the MACD histogram, which has fallen sharply from its peaks early in October and is way below its red signal line and is approaching the zero line. If we have a look at the stochastic oscillators, both lines are in oversold territory. There does appear to be a bullish crossover of the percentage K line with the percentage D line, a very weak one. So we could perhaps be seeing an upside correction in the very near future. At the moment, though, immediate support is coming from the 61.8% Fibonacci retracement of the upleg from 109.77 to 114.54. So that's around 111.60. We can see their prices also have broken below the 50-day moving average. If we were to see an upside move, immediate resistance should come from the 50% Fibonacci, that's around 112.15. A break above that would open the way towards 112.70, that's the 38.2% Fibonacci, and above that we have the 23.6% Fibonacci at 113.40. A move above 113.40 could lead the way back towards that 11 months high of 114.54, and then a fresh high would then signal a resumption of that uptrend that began back in August. However, if we were to see further losses, a break below 111.60 would open the way to 110.80, that's the 78.6% Fibonacci, and then below that we have the 200-day moving average just below that August swing low of 109.77, so that would be the next target to the downside. Let's now turn to pound dollar. We can see pound dollar is looking fairly neutral at the moment. RSI has flatlined just above the 50 neutral level. There is immediate resistance coming from the 23.6% Fibonacci retracement of the upleg from 1.2661 to 1.3297. So that's around the 1.3147 level, just below 1.3150. If we were to see a break above that area, resistance could then come from around 1.3215. So that's been a resistance level several times in the past, and then not too far above that, or at 1.3257 is the October high, and then of course after that we've got the September peak of 1.3297. So 1.33 level remains a key challenge that the pound dollar needs to break above it, and then doing so would help pound dollar resume its uptrend that started from back in August. To the downside, there is the 38.2% Fibonacci as immediate support at 1.3054. Below that is the key support level of 1.2980, which is the 50% Fibonacci, and also where the 50-day moving average is currently converging. So drop below that would shift the near-term bias back to a bearish one, and then we could see the pound making another downslide towards the 1.29 level, which is the 61.8% Fibonacci. Below that, at just below the 1.28 handle, is the 78.6% Fibonacci. So those are key levels to watch out for if we were to see another sell-off in pound dollar. And finally, having a look at the precious metal, gold finally managed to break above the upper range of its neutral term range that started from back in late August up until early October. So we had the upper range of 1,215 and the lower range of 1,180. So last Thursday we saw a break above that, and also doing so also took the gold prices above the 38.2% Fibonacci retracement of the down leg from 1,309 to 1,160. So that's around 1,217. This morning prices touched a 2.5 months high, 1,233.17. That also happens to be just below the 50% Fibonacci at 1,235. If you were to see a break above 1,235, that would significantly strengthen the upside momentum and could lead to more sustained gains. And then higher up we have 1,252, that's the 61.8% Fibonacci. And then there's the 78.6% Fibonacci at 1,277. That also coincides with the 200-day moving average. So that area around 1,277 could potentially prove a strong resistance area if we were to see further gains of the coming days. To the downside though, if prices broke below the 38.2% Fibonacci, so that would take the precious metal back inside that neutral range, and then we have the 23.6% Fibonacci at 1,195. So that's just below the 1,200 level being still a very critical area. A drop below it could see gold heading back towards the bottom of that neutral range and 1,180, and then a slip below that would open the way towards that 1.5 year low 1,160 that we saw back in mid-August. If you have a look at the momentum indicators, stochastics are pointing to possibly an overbought market. The percentage K line has crossed above 80%. D line hasn't just done so yet, so there could be further gains to come in the next day or so before it actually becomes overbought. If you look at the MACD though, it's clearly pointing to a shift to a more positive picture. The MACD histogram turned positive for the first time since April. So that's a very significant development. That's it for me. Thank you very much for watching and have a great day.